Tuesday, March 18th, market analysis. Stan Ehrlich, good morning. You know, I start out with the stock market indexes and go to futures contracts and sometimes other topics like cyclicality cycles. Oh, maybe chart formations, a variety of things. Today, we've got a down index, a down market across the board, and a fairly significant down day, down about 7 points at the moment. Spider points, that would be 70 approximate points on the E-mini. Qs are down 8.5. NASDAQ futures down 355. So what we've got is a challenge of yesterday's lows, and we're still basically right in that ballpark. In fact, the markets started to go sideways for the last hour or two with a little price range bouncing around. You'll see it in a moment near the low of the day, leading me to believe we've hit a little support. Yeah, but I don't think it's going to hold. I think we're going to start to make lower lows for the day before the close at 1 o'clock California time in about 3 hours and 10 minutes. So the E-mini challenged yesterday's lows and stalled out. Look at the 1 minute chart. But we're coming down close to those lows again and got very close, like I said before, maybe made a new low by a tick or two. But in order to perpetuate this bear move and going back to the daily chart, I still have a downside objective of 5,500, give or take a point or two. And we've got to get below that support area, which we already bounced off of last week. So the bounce, well, I didn't have much faith in it to begin with. Obviously, I've said I didn't trust the rally. I didn't expect much. At best, getting back up to the original downside breakout level from this double or triple top formation. That produces an objective of 5,500 approximately. So we could be on our way to new lows. Now, I said minimum downside objective, so you could go further. The next step down should be somewhere in the ballpark of around 53.20. I have to say maybe 53.68 to 53.05 or something. The previous lows back in early August. Yep, of last year. That would be the next level of support after the downside objective has been reached. Again, I'm looking at 55, basically 5,500, 5,505 for the first significant objective as a result of the double top. I think we're on our way down to that level, and we may even get to new lows before the end of this week. Here's the 1 minute chart coming down quickly toward the low of today so far. Spider, SPY, obviously pretty much the same thing, except remember, it only trades from 6:30 in the morning California time until 1 o'clock. A very short, relatively speaking, trading day when the E-mini trades 23 hours a day. So that makes the chart look a bit different and provide occasionally different signals also. Usually the daily data charts are going to have essentially the same formations over weeks and months and so on. That's the important similarity longer term. So here with the SPY, my minimum downside objective is 542. We're well below yesterday's low. And now I'm looking for lower levels. SPY 5 minute has already made new lows this morning a couple different times. After the initial lower opening and an initial break, small bounce, new lows. Small bounce, new lows. Next chart, QQQ, well below yesterday's low and the day before. A little more bearish. Kind of bouncing off the bottom of support for the moment. But again, I don't have much faith in any bounces in here. I'm still looking for a minimum downside of 458.5, maybe even lower. Let's get there first. The 1 minute QQQ, maybe a little head and shoulder bottom here, but it's very, very small. If all that's true, It's trying to break out right now with a line across these 2 points. And we're, playing with the neckline momentarily. But this pattern is extremely small, and I'm very suspicious about patterns that are only a few hours in size. Not that they don't work plenty of times. It's just that they don't cause too much of a move up or down. But, if you can predict even a small move up or down, more power to you. And they do sometimes. So I doubt it's going to work. NASDAQ daily data chart way below yesterday's low, back into support a little bit. But the bigger picture is the double top. Minimum objective, 19,221. And that matches up with pretty much support levels and major previous lows also. So I like that a lot. I think we're going to be making new lows to the whole move in all these indexes the next few days. Might take a week. This is the 1-minute chart on the NASDAQ. Next is the YM Dow, not below yesterday's low. Doji inside trading range day did touch and stop at, so far, the resistance area above the original breakout to the downside. Perfect, classic, nothing unusual. Looking for lower lows and back into the support area down to 4107 and eventually down to 3865, 38655, I should say. And that is my minimum downside objective on this double top formation. Well, let me raise that back up a little bit. Whoops, that shouldn't come up. And move this up to about there. That's better. I had forgotten to shift this a little bit. So, on its way down. And the 1-minute YM Dow, new lows, slipping off. Next, RTY, Russell 2000, low cap stocks, cheap ones, so basically usually. Now, I think maybe that rally was over yesterday at this point because of the doji inside down day and the other indexes making progress about new lows for a day or two. So I'm looking for a test of support and probably breaking below 2002. Now, I don't have an objective here because there wasn't a particular formation you can measure down from. There's something called measured moves. You get a 10-point break in a 5-point rally. Maybe you're going to get a 10-point break again, that kind of thing. But I don't use those, and I don't use them. So I'm looking for new lows. Test of support. Next, Russell, 1-minute chart, trying to bottom out. But when these things fail, you produce another sharp leg down, and that could be very easily before the close today. Bonds. I had forecasted last Friday for my low. I got it on Thursday so far. Today, we did get below Monday and last Friday's lows, but not a new low. Didn't touch my expected price range and time frame for it to bottom out in. It just barely touched it last Thursday's low. So I'm close to being more correct, but basically hit it pretty close. And now, unchanged, I'm looking for higher than yesterday's high on a close, and of course, higher than the bearish engulfing sell signal, which worked a little bit. It made money, but not a lot. That happened on March 11th. Get above that high, stay above that high. Then we've got a breakout to the upside, which I would believe to be imminent. And that produces a minimum upside objective because of a head and shoulder bottom with a double bottom as the first shoulder. The bottom of the market is a bullish engulfing ER buy signal on the low day exactly, January 14th. And now we are, in my opinion, developing the last shoulder low. This is the beginning of a move up for the pattern I'm talking about up to 128. But here's the thing. That is only part of the bigger picture. We had, again, by the way, ER buy signal on the bottom of the market, October 23 of 2023, a buy signal, and the first low. Again, my ER signals work like a charm. last January 14th with a buy signal. I think this is a sloppy looking double bottom. Yeah, I've seen closer price levels, looks a little better. And I think this is a double bottom that would then have an upside objective of a whopping 146. And that's going to take more than a few days, for, obviously, maybe a year or more. Super long-term projection I normally don't make. 10-year notes. Broad double bottom, same year and a half time frame. Second low didn't get us a buy signal, unfortunately, like bonds did. We got a buy signal at the bottom on the first low. These two lows are very close together and do produce a very decent looking potential long-term double bottom. And this yellow line should be right about there because that represents the price levels at which the first low occurred, and the second one was just a tiny bit below it. Upside breakout way up here for the huge objective 124.5, but the head and shoulder bottom is definitely developing. The last shoulder low, in my opinion, and if it does work like I'm looking for, the breakout's going to be about 112 and a few ticks, and maybe a week or two or three. We'll see what happens. Crude oil. Oversold, almost hitting support, but today is an outside down day, and if it stays lower than yesterday's close, it implies the market's going to go back down and test that support area. We'll see what happens. I'm looking for a break down to 65 and a quarter approximately, and yeah, probably a minor new low after that. And we might very well be in oversold condition again, and then closer to a major bull trend line and in a support area. So one more break into new lows slightly. Heating oil. Probably the same thing, except we don't have a support area nearby. We went up to resistance and stopped today, and yesterday was more accurate, but the resistance area is an area, not necessarily an exact price, although you can use the bottom and the top as more appropriate levels for rally highs, break lows, that kind of thing. And looking for a little bit lower lows, continuing break. Natural gas topped out with a classic blow off top, upside exhaustion gap, couple of big down days, going sideways, including today. So we're in the fourth day now of almost the same highs, and the lows are very close to each other. Breaking and closing below the lows of the last 4 days, anytime now, would probably push us into a new leg down, which I'm expecting. And that's going to be down to 3.5 and even lower. On the other hand, maybe we can bounce back up to 4.3, and that could be a very significant turning point. But let's see what we get for a breakout up or down next day or two. Natural gas. Next chart is gold. Way overbought now, 80. Not in the critical zone like 90 plus, but overbought causes me to be very cautious about any kind of bullish commentary. I do expect a turn down very soon. I'm not saying what price it's going to happen at, but I do expect it to be probably this week, and it could even be today. So I'm looking at gold starting to be toppy. I move back down to 29.74 minimum. Let's see, wait, I got one more upside objective here. That's right, 31.16. I'm not ruling that out. Remember, we did have this old pennant formation back here, and on January 15th, we broke out of it. Two ways to measure an upside or downside objective off of a pennant formation, and that is how wide is the back of the pennant, and that's where I get my first objective, which we were at and fulfilled already last Thursday. But the bigger one is the measurement of the staff or the flagpole of the pennant, and that means you take basically the beginning of the move, looks like right about here, and you measure up to there, And that's that larger stick from here all the way up to there. So that's how you get your two measurements. And we are well on the way to the higher. So I'm not ruling that out. Silver. I've got a marker here for the possibility of a last shoulder high. We're overbought. Could easily turn down any old time now. It would be approximately the right price and approximately the right time for the last rally to make the last shoulder high on a head and shoulder top. And it would look like a real good pattern if that's what's going to happen. And I do think there's a very good chance of it. So the downside objective on this is huge, down to 23.26, 23.26. If the whole thing works out correctly, you should probably move this to the right a bit. And since the neckline is so far away at the moment, I'm going to even stretch it out a little further and move it over to, say, here, because it's going to take some time to get, down to the neckline. So that's maybe a little bit better representation. It raises the minimum downside objective a little bit higher, not much. It follows the slope of this neckline. So I'm looking for a turn down. Platinum, overbought. Hit resistance today. Now currently lower on the day. Looks like it's trying to turn down also. No surprise. So if I'm right about a minor top here, how far down is it going to go? I'm looking at 977, maybe even down to 937. Next chart, copper. Now, first time overbought since early February, when we did have a great sell signal, which worked just fine for a week or two. In fact, the sell signal before that worked great also. Before that worked excellent. Before that worked super. And the sell signal that we had before that worked slightly. The buy signals have been okay. That was outrageously great. A little premature. So, possible top, overbought, watch out. Don't go long up here. Look for sell signals, which I am, expecting it to top out very soon and not too much higher, if at all. Next, grains, soybean. Long-term bottom formation still holds. Today's nothing much, a doji around unchanged, a tiny bit lower. I'm looking for a major long-term bottom, which started developing back in August. We'll see what we get. Possibility that this could be a shoulder. That's the head. The shoulder has been made already last couple of weeks. And if we start heading north, I'll put my annotations on the chart, my markings, and a neckline I've already got drawn pretty much dead flat. Actually, it slants downward very, very slightly. This high is only 2 cents shy of making a new high since September. So the high I'm talking about is February 5th. So I'm thinking we're starting to move our way up. Soybean oil, new high, last couple of days, nice, turning up. That's what I'm talking about. I like what I see. My first objective is the minor resistance area, very close already, 4309-ish. And then the top of the resistance, 4470-ish. Then we're dealing with some really big potentials if we can get over 48.55. Bonds, soybean meal. Minor new low for a few days, coming close to doing something that I wasn't expecting, which is a minor downside breakout. So this series of lows at approximately the same price levels, so going back to June of 23, almost 2 years, I think is still going to hold, and we're still developing a long-term bottom. But I don't want to see lower lows here, so I think we're close to turning back up. RSI is not helping whatsoever. It's very neutral. All I've got is a support area that we've bounced off of a couple of times already, just recently, to cause the bounce and start to turn up, but it's not doing it yet. So keep a close eye on meal in particular. Corn is a minor new low for a few days, and the pattern is still good. And that is the low on March 4th is a shoulder low. The head of the formation is August 27th, and the first shoulder with a bullish engulfing buy signal on February 26th of 24, a little over a year ago. Damn big head and shoulder bottom, over a year in size. Neckline is way up here just to get the ball rolling at 518, and we're at 458. So I don't want to see much lower. I do want to see higher highs, which I'm looking for, but today's not great. We did make a slight lower low, and we're not staying down there, so that could be interesting. If we get a lot stronger, for instance, having a bullish engulfing, that would be great. No signal. We're not oversold, but still good. Let's see what happens trying to justify long-term bull move in corn. And wheat yesterday made the new high for like the last couple of weeks. Today, almost again, currently around unchanged, down a little tiny bit. And I'm looking for support to hold, new highs to be made, and a long-term bottom to develop. Your primary or first breakout would be at 622 plus. The real longer-term breakout is at 648 plus. That produces a lot better move up to at least 750. Next, cattle. Overbought. Could have a bearish engulfing, and then we'll have a red sell signal. We did catch the last low of significance, and it worked out so far great. You might still be long from this buy signal, ER1 overnight. And if so, our stop should probably be coming up very tight because we're now overbought. My trailing stops are not based on a moving average at all. I don't like moving averages because they're designed to be late always. You're never going to pick the top day or get super close. Even with a short-term exponential moving average, it's going to be a few days late probably. But this system does, and you've seen it many, many times, pick the exact high day or low day. So having a very high RSI, and if you were still long from the low day with our ER buy signal on March 4th, the reason why my stop is getting tighter and tighter and tighter with the rally is because of the overbought condition. It causes the stop to get tighter and tighter. Why? Because when you get overbought, you turn around and go down again usually. And that's exactly what I'm expecting. And Miss Piggy hogs, hanging around support, trying to come back, momentarily down quite a bit around yesterday's lows. I don't know. I see this top as probably producing a little bit more weakness and a test of the lows we've been down to before on March 4th again. So looking for more weakness, but I'm not very sure about my opinion in hogs at the moment. And let's go look to see what's happened to the indexes. Looks like we did not make new lows yet. E-minis bouncing back very slightly. NASDAQ 1 minute bouncing back a little. YM bouncing back slightly as you would expect. And the Russell is still in the same range, bouncing back a little bit at the moment. You guys have a great day and profitable trading to you.